Hey there, traders and investors. We have made trading analysis live stream history. And I can give no credit to myself. It all goes in the hands of Bennett Tyndall for starting our first show without any hitches, right on time. I told you Bennett's the man for the job. Well done. Round of applause for Bennett and the whole team at Trading Analysis. Anyways, good morning, guys. Sort of inside. This is your new show. This is the first time. This is first time on this show, but hope you guys are doing well, and we have a good show for you here this morning. Let's bring in the team at Trading Analysis that makes the magic happen every day. Bennett, Alex, and Terry. Good morning, guys. How's it going?
Good morning.
Morning.
Good morning, sir.
I'm just wondering
well
whether you're streaming to the right link again because it's not broadcasting over there. So much for history.
Oh, we'll
we
have
got,
to wait
we
till
got
next
people
week.
waiting, and I don't see the broadcast coming through. So,
That's interesting. 'Cause
Well-
I did use our preset link. I'm not quite sure what happened there, but we'll get it. We'll get it. We got it on time. That's step number
all
one.
right. So we're on the wrong link. Okay. So what do we do, team?
how do you fix that? Last week,
Last week we just sent the proper link into the feed that
Chat
people were
room?
waiting on, but
okay.
they're moving over.
Okay.
How do you want to handle this, Todd? Should we just keep rolling, or
What's the new link?
it's? I swear, YouTube site is
Send me
very
the new link.
confusing. Because
I've been telling you that. I've been telling you that for a year.
I followed our preset link, and then you click Edit Event, and it defaults to a January stream. So very confusing, but looks like people are making their way over here.
Okay.
You
Well,
drop that
you have
link in the Slack.
Yeah, will do.
All right, we're gonna get it straight one of these days, guys.
One of these days, maybe. Yeah. Let's see. Channel. All right. I'll send it out on.
Good to
I'll send it
go.
out.
All right. One little glitch.
Oops. Let me shut myself up there. All right. I'm going to just drop this out on Twitter here. And who's ever, and also, guys, if you're Trading Analysis Team, if you guys are broadcasting live, just shut that audio off on the kind of the end product. All right, so let's just pick it up. Maybe next week we'll try it. But hey, welcome. We obviously little link confusion there, but we'll get this straight. All right. So good morning, guys. I want to start. Are we good? Should we just roll on, Bennett?
Yes.
Okay.
Yeah, we've got people moving over.
Okay. Good morning, guys. Sorry again. We have sort of a link confusion. We almost had it, but we'll get it next time. It's no easy production to do this. So we'll get it. All right. So one of the things I wanted to kind of talk about to start, as you guys know, I'm kind of stepping back just a little bit from the day-to-day operations at Trading Analysis and taking a much kind of bigger time frame approach. As the guys, Alex, Terry, and Bennett are every day inside in the trenches, pulling this market apart and kind of guiding us in the intermediate and smaller time frames. I've been focusing more on the wealth management side, as I've told you guys for a long time that's what I wanted to do, and I'm doing it. But the show goes on, within the trading analysis community. So I'm anxious to hear what the team has to say about where we're going in the near to intermediate term. But longer term, I wanted to show something that I've kind of been working on that I've found that kind of serves me well. Specifically in times of when sentiment shifts heavily one way or the other, when the news flow and the news stream gets so convincing in one camp or the other, either bearish or bias, I think it takes, I think it serves you well to take a big step back, kind of forget about everything that people who are so certain of their narrative are trying to drive into your brain. Just take a big step back, put some great music on, forget about everything, get in the zone, and look at the pieces of analysis you look at. You look at the fundamentals, look at the technical, look at, find what you want to see, and believe in yourself, specifically if you're looking at the charts. And I find that it's really good just to get simple, be logical, and analyze without emotion, and basically dare to believe what other people don't. And I think that really has served me well over the years to pick up pretty significant market turning points. I can't do with it with any real degree of consistency, but I have pulled up some pretty good market calls that really have just been a product of, as I've said, forgetting about what everyone is saying, believing in yourself, and looking at what's happening in this market compared to what they're saying should be happening. And in between there of what's happening and what they say should be happening, there's a void, and you got to figure out if that void is something that needs to be filled, or it's indicative that the prevailing sentiment is wrong and the crowd is going to continue to be more wrong. And what I mean by that is Bennett, can you throw the screen over here?
Yeah, there you go.
To do a screen share, thank you. And there we go. So check this chart out. This is kind of fun. I was playing with this on TradingView. So let me just kind of take you through this chart that dates all the way back to the 1929 crash in the Dow. So if you look at where we are, since 1929, we're 90, 91 years past that crash here. I see us as three kind of secular or significantly long-term bull market phases. From the 29 crash up into the 1966 high, where we went into the 60s and 70s of sideways stagflationary price action, I would say this is a correction, which was preceded by a pretty significant trend that wound up going 2,200, and I'm moving that around. So this says 2,255%. I'm off by a little bit. I sort of rough-handed, kind of back of the napkin calculated. So roughly 2,200 and almost 2,300% rally. We went sideways, 60s and 70s, and then I would say in 82 was the birth of the next secular bull market that lasted from 82 up into 1999. That equated to 1,144% gain. Now, again, I would say that everybody's getting way too bearish here, including retail investors and traders like us, institutional traders, world-renowned hedge fund managers, legendary traders. But if you put it in the context and forget what everyone is trying to tell you about imminent recession, we've only rallied 353%. So I would say, okay, let's look at this logically. If we've seen 2,200, 1,100, the percent difference between these two was a 50% relationship. All right. So far, what we've seen is 1,100 to 353 equates to a 30% relationship between percent gains in these two markets. So what if this kind of 50% relationship holds, meaning we need to see a percent gain from the credit crisis low of 09, half of that what we saw in the prior bull run gives us roughly that should be a 574% gain, give or take, from Dow, 6470 lows. So if that relationship were to hold, I mean, just looking at the past, setting everything aside, that gives us a Dow 37,000, as we're at 29,000 right now. And the top of this little orange box roughly puts you at that 37,100 level. So I don't know. I just thought I'd throw that out there and say, has the current bull market in the context of the prior two significant bull runs, post-29 crash, gone too far? I would say logically, visually speaking, looking at past relationships, looking at what the market's done, this country is only, 250 230, 240 years old, whatever it is. I mean, we're not an old country to say we're very long in terms of this bull run. I don't think is accurate to say, and especially the way the stock market is holding. I'm long. I've had this conversation with a lot of clients coming on board at Ascent Wealth Partners. A lot of them are coming in saying, Todd, I want to be with you. I trust you. I've watched you for a long time, but I want to hedge. I want to get inside and I want to hedge. I want to put SPY, SPX put spreads on. I want to put stop losses on my position. There's two answers to that. If you put this, what we're looking at in the long-term context, I think we're still early in this bull run. I think I'm doing nothing in my personal cash accounts. You know, I show you my cash accounts all the time. I will be exiting these positions soon and just turning my capital over to wealth management. I'll still continue to run an account that I trade with Trading Analysis, but I'm not hedging. I'm very long in the market. You know, some of my biggest positions are SPY, XLK, Qs, Apple, XLY, AMD, Facebook, Intel. Those are my largest holdings. So I'm not hedging right now, but again, I'm operating on a longer time frame at the wealth management firm than when I walk a block and a half from the wealth management offices and come here at Trading Analysis. I will still be keeping a well-funded account, moving in and out of the markets as I do, as Bennett, Terry, and Alex do. So that's my perspective from the wealth management side. Hopefully that makes sense. And let's let the guys who are doing the magic in the intraday time frames take over. Who wants it?
That's the key. That's the whole key, is the time frame, right? The time frame that you showed in those charts are generational corrections, right? Periods going to last multiple years. So, you know, that what we're looking at in the current horizon is a much shorter term corrections, right? These are just, we're not looking at a generational correction coming this year, certainly. And so I agree with your analysis here, Todd.
It's perfect. Thank you. And if it was 50%, I mean, we still have 1,000. I mean, we have 10,000, 8,000 Dow points to go. You know, the S&P, I think that equates to like I'll do the same thing in the S&P. There's not as much history in the S&P as there is in the Dow, but I think that's roughly up around a 5,000 or 4,800 S&P, something like that. So, anyways, I want to get down to the smaller time frames. And I know you guys are not interested in longer term, perhaps for your intraday trading money, but longer term, that's where we stand. So, Bennett, what are we seeing here, man? I'm kind of anxious to see what you guys have been up to.
Yeah, absolutely. Let me go ahead and bring in MotiveWave, and we'll take a quick look at the S&P. So, I don't even need the screen. I've got it shared on this end. All right, guys. So
oh, that's right. I forgot. Yep, I got you. I'm with you.
He's the driver.
So, guys, last week we were having the discussion whether or not the low that we saw on January 31st was, in fact, all of that green minor degree fourth wave correction. From a fib standpoint, there was still the possibility that the S&P was working some sort of a flat. The NASDAQ was showing a lot more strength and was kind of exceeding what would have been typical B-wave extensions. So I just kind of felt that fourth wave was complete. It presented a buying opportunity. And if you just kind of bring in some basic traditional technical indicators, 50 and 200 day moving averages, which, as you know, has a lot of investors, a lot of retail traders utilize those levels as entry points and exit points. And you'll notice this fourth wave correction came to completion right at that 50-day moving average. And if I get you off the daily, I'm actually going to take you guys all the way down to a 10-minute chart. So we're going to focus on everything following this green fourth wave on a 10 or 15-minute time frame. Let's start it off with a 10-minute chart here. So out of this fourth wave, which did give us equality of the magnitude of the correction of wave 2 of the same degree, so green wave 2, and a typical 38.2% retracement. We just beyond a 38.2% retracement. So following that, we can count a nice 5-wave move here in orange 1, down in orange 2. We have 2 acceleration gaps within this third wave. This third wave took us beyond our 1618 objective for that third wave, and we are now, we then entered just a little three-wave correction back into the area of the previous fourth. This was a fourth wave pullback that we were looking for with our members. And as you'll see here in this orange wave 4, it also demonstrated equality to wave 2, just shy of a 38% retracement, and kind of right near the area of the previous fourth. Following that, we've continued to push higher, and we're tracking that 3380 upside target in the S&P. We're getting pretty close. We're within kind of this fourth wave. Yesterday we had a bit of a correction back here in blue 4 of this orange 5. And we are getting into the kind of upper end of this fib extension zone. Could this possibly be setting us up for some sort of a fourth wave correction? Absolutely, and that still is something we've been actively tracking and watching for. But as you mentioned, from a higher degree standpoint, and just taking a look at even the weekly chart here, with the idea that the correction came to completion in 2018, and we're within this excuse me, cycle degree green wave 5, we had an extended third, which was right at a 1618. So seeing wave 5 being equal to the magnitude of wave 1 is not at all uncommon, and that's, you know, 4283 in the S&P. So I'm with you. I remain bullish from a longer term standpoint. I don't think there's any reason to be overly concerned and hedging in a large portfolio. I'd love to trade this fourth wave if we begin to see evidence that it's about to unfold. But as far as an investment standpoint, I think the markets look great.
Do you agree that teal 3 Bennett looks a little abbreviated? Aside from, and I totally see what you're saying with those 3 green fib resistance levels around 3370 to 80. The fib aside, do you think that teal 3 parentheses 3 looks abbreviated?
You know,
the substructure.
Yeah, originally we were looking at this as green 1, green 2, green 3, green 4, and green 5, which did give us some sort of a pullback, and then we came in as this fourth wave was developing and said, you know what if we had an extended first wave, a shorter third, and then an even shorter fifth? But that said, so let's take that into consideration. Let's say that is green 3, this is green 5. Let's bring in a ratio analysis of 5v1. You know, 35-45, it's still valid as a fifth wave up until 35-45. And just because our 1618 objective is in fact our, you know, traditional kind of third wave target once we surpass equality, doesn't mean we don't see a 200% run up to the trend channel here. And taking a look at the higher degree third wave, I mean, equality doesn't come in until 34-35, and the 1618 is up at 3960. So absolutely,
hey,
this could just blow right through there.
Okay, perfect. Hey, one thing, throw your crosshairs on because we're not seeing your mouse, or we're not seeing your cursor.
Sorry about that.
So just so we can, yep. Yeah, there you go.
And
okay, that's interesting.
Yeah, go ahead.
No,
full circle to the NASDAQ. And we've already surpassed the 1618 here in teal 3. So we're into the upper end of the trend channel. You know, do we get some sort of a catalyst that the market had no idea it was awaiting for? You know, it's possible, but I think overall implications are still to the upside. So I'm not too concerned about that fourth wave until we really start to see it, you know, unfold and get underway.
Got it.
And then let's go ahead and cover a couple of individual names that I like in this market environment. So Google's actually showing an interesting pattern here in development. So let's take you down to the daily. Another fourth wave, kind of an unusual E wave, but we do see this quite often. Following the completion of that orange wave 4, we have a nice 5-wave move here in blue 1. Down in blue 2, we have equality of the corrective legs. Another 5-wave move here in development. Green 3 was a 1618 of green 1. It was right at a 38% retracement. And I'm looking to kind of potentially get a position on to carry us up here in green 5 of blue 3 before setting lower in that blue 4. But overall, pretty healthy looking chart. Had a nice move after earnings. Salesforce continues to push towards our upside target there around 200 a share. We've already traded, 192. Pretty decent move out of Salesforce. Let me check my notes here. Texas Instruments. That's another series of 1-2-1-2s that we've been tracking as a possibility. And we're starting to see evidence of some sort of a wave 2 development within green 3. So if we do blow through that upside resistance zone in the S&P, this will be a great opportunity, I think, to take advantage of. Just a simple call spread you can get to carry us through that third wave. And Cisco, that's another one we were tracking last week, I think is a sharp-looking chart. Let me go ahead and bring the 50-period moving average here on the daily. Kind of found some support out of this fourth wave. Have a nice 5-wave move here in orange 1, 3 waves flat here in orange 2. And our initial target is 51.14 with the 1618 at 54.72. So there's some good-looking opportunities and charts in this market, and I think we should definitely be keeping our eyes on kind of developments the next few days. I'm really curious to see how NVIDIA reports, given how strong the SMH has been.
When is that going to be?
Yeah.
Isn't it the 14th? Or
Is it 14th? Oh, okay.
It's the 14th or the 18th.
I think Cisco's got earnings after market today.
Yeah, Cisco's today, but NVIDIA is the 13th, so NVIDIA's tomorrow.
Right.
NVIDIA's tomorrow after the bell. Yeah.
Got it. I'm just doing a quick scan here. AMD had a nice day yesterday. Do you have any updates there?
Yeah, we were talking about the idea that even if this was all of wave 4, we should get some sort of a wave 1 with a wave 2 pullback. But what's interesting is if I get you on the 1-hour chart, this move here, this structure here, you could call this a complex. You could call this just a simple ABC. It would be an unusual C wave if this were down in A, up in B, and this is supposed to be some sort of a C wave. That looks like a 3-wave structure to me. I'm still tracking this as possibly some sort of a B wave of a 4th wave flat, just given the fact that we fell so short of the of time elapsed here in wave 2. But the great thing about the position that we had on there was we designed it to, if it did push and completely move to the upside, we're only out the small premium that we paid, which was $3 a contract on that one. So I actually still like the position. I still think with what we see out of the SMH, which let me bring that to you right now, I still think we could be in an ongoing 4th wave position in semiconductors.
Okay. Duly noted.
And in fact, this move here, could that be all of wave 4? Certainly. It would be a really short 4th wave compared to 2. Wouldn't even be 61% of time elapsed in wave 2. This was kind of sideways, and this was more directional. So given the guideline of alternation, could be all of wave 4. But I'm watching this kind of 3-wave push back to the upside as possibly a B wave, which would be indicative of still C of 4 to come.
So go back to NVIDIA if you can. So earnings tomorrow. By the way, we also have BABA tomorrow, which would be interesting. The chart doesn't look good, but earnings focus will be NVIDIA and Alibaba. NVIDIA, I'm seeing what you're doing on the red count, and we're getting a little saucy in terms of this being a B wave, to your point on SMH.
Yep, I completely agree, which I don't know if you had a chance to check out our blue count alternate, which essentially just calls that a 4th wave completed, and we're pushing into the upper 5 of blue 3. So equality of green 5 would be 276.26, and then the 1618 up at the 300 handle.
Gotcha. That makes sense. Okay. All right. Don't want to get you off track. If you want, take a look at Apple.
Certainly.
A lot of consolidation after the earnings 2 weeks ago, last week. I have to check. A lot of consolidation. Was reading a little bit. One of their biggest, Foxconn, I think, is the biggest manufacturer. They're had a really slow, if not shut down, operations. One Chinese Lunar New Year, and then the coronavirus. So I think they said they're like 10% back online, and I think Apple is kind of consolidating based on that, which, as you're showing right there, is just a simple 4th wave. So I'm wondering if we do have that room towards 350. Sorry, we have two of our 3 kids are sick right now, including me.
It happens.
So a lot of consolidation there in Apple, which I ultimately think would resolve higher.
Sorry, it looks like we're getting multiple people working the charts at once here. That's the great thing about the repository, though. So
it works.
It's great. I think it's fantastic. It's a great way to collaborate and keep everybody up to speed. So yeah, I still think we have upside room in Apple, whether this is still an ongoing fourth. The higher degree fib implications are, 350 would be equality of our cycle degree waves 3 and 1. We're just kind of blew through this trend channel. We almost kind of back tested it as support. So I think short of any seriously negative figures out of that situation, then we should be continuing higher and even consolidating again in kind of some sort of 3-4 situation.
Right. Perfect. One thing that I, in terms of internals, I just wanted to bring this up. If I could, I'll just show my screen real quick, and then Terry, are you gonna hop in and tell us what's going on in the sector world?
Sure. We'll cover a couple of things real quick.
Did we lose our go-to meeting?
Let's see.
I'm just not
Todd, you need the screen, Todd.
Yep, got it.
There we go.
One little internal that I've been kind of focused on. I like to watch the moving average of tick. So NYSE tick, amount of upticking stocks versus downticking stocks on the New York Stock Exchange. It indicates institutional buy or sell programs. So when the institutions come in and they click a button, buy all 500 stocks, you're going to see a lot more upticking stocks that second than downticking. It's a really good day trading tool if you're into that, but I like to smooth it out and put a moving average on it. And it's called some pretty good turning points. So this is a 60-minute of the 9 MA of the NYSE tick. So so this is a 9-period smooth. The teal is the actual moving average, and the tick readings are the shaded gray bars behind us, overlaid on the S&P here in purple. And what I was a little concerned about here, I mentioned this in the member webinar last week, is the NYSE tick was not breaking. The moving average was not breaking higher as the S&P was moving up above 3340, 3360 area. Well, we did just recently get a new tick high confirming that we are seeing more and more institutional buy programs coming in, which is good. I would like to then see a break of this high on the moving average, which, we've broken trend resistance here, which indicates we might continue to see the 9 MA go up as the S&P makes new highs. So keep an eye on that. If, however, we were to break down, this guy were to lose trend support, then that would start to indicate that, again, we don't have confirmation, but I'd like to see this guy continue to move up. And I do know the advanced decline readings continue to be strong. One little bit of concern is the trend. Same study right here. S&P continues to push higher here in purple, but the trend, which is a counter trend indicator, you'd want to see the trend continue to push lower. We're not seeing it right now. So trend is basically the ARMS index. It's a combination of advancing and declining issues, and then the volume in those advancing issues and volume in the declining issues. We have broken trend support. You'd like to see this guy continue to go lower, which means there is more volume concentrated in the advancing shares than the declining shares. We're not really seeing it. I guess I'm not all that concerned right now. Because again, there's a handful of high market cap tech stocks that continue to lead us. That's the market we're in. Is this a serious warning sign? And I think it might be kind of reflective on this chart. I don't think it's a huge deal, but something you just want to keep in mind. So that's all I have right there. Terry, you want to take it in terms of show us what's going on in the sectors?
All righty.
Then we'll wrap it up. Minute. All right, come in your direction, sir.
Okay, so this is our Optima tool and our sector rotations. Relative rotation graphs is a chart of this here is the chart of the S&P 500 sectors. What you have across the horizontal axis is the relationship of the relative strength of the underlying instrument to the benchmark, and in this case, the benchmark is the S&P. The vertical axis is the momentum of the instrument related to the momentum of the benchmark. So what you have here in the center is 100% in terms of relative strength, and momentum is the S&P itself, and everything else balances around this. So all 11 of these sectors make up the chart here. You have to have a balance to keep this center here. So what I'm seeing here is the tech sector pushing much higher in terms of relative strength and momentum in this, and this is a weekly chart, and we're on the 4-week period here. I can't manipulate it until this thing quits importing data, and I have no control over that, so gotta wait on that. But there we go. So the rotation over the last several weeks has been pushing higher in the technology, but you've been pushing lower in financials, industrials, materials. Communication has been kind of wagging around. What you've got is the thing that I see is holding the market up is you've got advancing momentum in the defensive sectors, real estate, utilities, and discretionary, along with technology offsetting a loss in healthcare. Healthcare is embedded here in the middle, and then energy. Of course, energy is a huge laggard right now. So this is what we're seeing here. We want to jump into this tech sector. I want to jump into the semiconductors if this thing will let me here. It's not behaving well at the moment. Excuse me. Well, if it's not going to behave for me, I don't know what happened here. There we go. Just a little lag on my end there. So you talked about, Bennett, you showed your chart a little bit earlier about possible being in a consolidation period for the semiconductors. Certainly, AMD is still way up here, very high in terms of relative strength to the S&P and momentum as well. But many of the semiconductor stocks have pushed down here into this weakening quadrant. Although they're down here in the weakening quadrant, look at the arrows. The arrows have started pointing back up. So this is kind of typical of seeing something move into a consolidation period, but still remaining strong, where it may come right back up and push back higher here in the fifth wave. So I think this rotation here in the semis kind of gives a little bit of credence to the little bit of slowdown there we're seeing in that sector. Let's see if this chart will flip over. All right, this is the overall tech sector itself, and the top 20 stocks that are in XLK. So in
this is relative to the S&P, right, Terry?
Yes, this is relative to the S&P, not relative to the index. I do have that chart down here where we can actually look at the stocks in the tech sector relative to the XLK performance itself. And I was going to jump to that. So, but what we've got here right now, leading in the technology sector, Adobe continues to push higher in terms of relative strength. CRM, Salesforce, Microsoft. We got PayPal coming up, about to cross over from this improving quadrant into the leading quadrant. So these are your leaders right now. MasterCard is in here. Right there. MasterCard and Visa, they're inside the 2 standard deviation filters, so they're not significantly outperforming, certainly not in terms of relative strength, maybe in terms of momentum. Now down here on the right, up is still in the leading quadrant. We've got NVIDIA and Apple, and you can see over this past, let's make that 4 weeks there, that's 1 month. You can see them, both of them, chasing themselves down. Apple trying to make a bit of a head fake turn, yeah, and NVIDIA making that head fake turn, but then continuing to push lower. So it looks like we're in for a little bit of period of consolidation, maybe in these two guys coming up soon. Let's take a look at this chart here, because this is
how closely they're chasing. It looks like they're almost in a fight, but it's amazing how much they're tracking each other.
Exactly. Now,
does that indicate any kind of correlation? Does that indicate that something is happening behind the scenes with these two companies, or
Yeah,
do you think that's coincidental?
I think it's just coincidental that you're seeing them here. But, certainly you'd have to look at the long-term tail and chase themselves around. They just happen to be in the same period. So maybe if you were to do your Elliottwave analysis, you should expect them to be at the same exact point in terms of the wave count.
Yeah, that's a good point.
So this chart here is the same set of stocks, but it's, instead of comparing itself to the S&P, we're just going to compare to the XLK, which we know is outperforming everything else. So if you want to see the stocks that are outperforming even the XLK, we've got Adobe, you got Microsoft. Those are the only two in the leading quadrant, right? You've got a group, you got a collection here gaining momentum, which could be the future leaders here in the tech sector, and that's PayPal, Intuit, Intuit and Cisco. We've got Cisco on our watch list. Texas Instruments is down here in the lagging quadrant. I know Bennett has been following this one closely. It's got a nice vertical push up in momentum, but it's not really gaining any ground in terms of relative strength against the XLK. So that's what you want to make money by.
Hang on.
Go ahead.
Sorry to interrupt. Same thing though. Apple and Nvidia are having the same kind of little street fight with XLK as they are relative to the S&P. That is so interesting to me, number one.
Sure.
And number two, with nothing except for Apple and Nvidia leading the XLK, and it looks like they're starting to exit that leading stage. That chart, to me, Terry, tells me you should perhaps maybe just have the XLK. And instead of trying to select the best in breed of XLK, is that your takeaway or no?
That kind of goes back to this plot here. At this point in time, the XLK is the only sector that's leading. Everything else is lagging, except these defensive sectors, which their relative strength is low, but their momentum is gaining rapidly. So could these guys eventually, excuse me, got a frog in my throat. But could these guys eventually push over into this leading quadrant? Certainly, and I think that'll be when we see the next little period of consolidation. Will it be a major consolidation? No. I mean, we're running at all-time highs here. The market has to take breathers, right? So that's what we'll be looking for.
Okay, that's interesting. So what if on a weekly basis, so XLK continues to be the leader, would you put, in terms of, risk on, would you put discretion or communications in that, or would you put XLV, even though it's in a downward heading, it's still on the right side of the x-axis is 100 reading? What's the second place?
Anything on the right-hand side still has a higher relative strength, which means it's going to perform, the price movement is going to perform better than the S&P. Okay. Anything to the left is going to lag the S&P. So in terms of momentum, its direction is whether it's going to continue to push higher or it stalls, right? So when we see a horizontal movement, that we know the momentum of the stock has stalled, and that generally means the uptrend is stalling. So, or the rate of change of the uptrend, right?
So you would put XLV in second place then right now, right?
Yes, I would, but
okay.
it is weakening here, and I got my little experimental signals there. Let me get them out of the way. But yeah, I mean, you can see here in the XLV, you can just see this sideways chop that's happening here, right? So that's a, this time period here is you've got gaining momentum here because you're pushing higher and higher, and then once it starts to roll over, once the slope of this line starts to curve over and go horizontal, then you're gonna see the momentum drawdown, and that's where we had XLV up here, back up here in middle of January, just about a month ago. We had XLV clearly up here in the leading quadrant, right? And then it started dropping vertical, which means that's just your loss of momentum. But it's still, it's the stock itself, or the index itself. I'll get it right in here in a second. The sector ETF itself is not a sell. It's just in a consolidation period. but we're going to continue to watch it, and really you kind of want to see these things hook. You see this little hook here in the XLI? Those are usually an early signal that something is changing in this particular industry's configuration. So it's no longer, the momentum is shifted. It'll take a little bit of while for this guy to rotate back around, but industrials might have something brewing, right? Here's a little colored chart of that. All these little colors, by the way, on this weekly chart match up to the weekly RRG quadrant. So I can just simply look here and see this is in the lagging quadrant, this is in the improving, this is leading, this is, it went straight from leading back to lagging, which meant to me that it crossed right over this origin point right here. So that's see how it just crossed immediately from the leading quadrant and just didn't hardly spend any time in the improving, shot straight across there. It's real interesting to see that in these charts.
Yeah,
when you do
and I wonder how much of that has to do with, and I'm looking at Boeing weekly on the other screen. I wonder how much that has to do with Boeing, as we fell just short of our.
It's one of the largest components of the XLI, right?
That's my point. That's my point. We fell just short. I think you guys had a 292 support, which is typical of the way forward, the prior fourth, 292, and I think we just fell short of it. Here we are, 346 bids, or $50 off that projected support. So you wonder how much that has to do with it.
Yeah.
But all right.
I think XLK could reverse higher and continue. I mean, looking here, these are simple moving averages, 200-day, 50-day, and 20-day moving averages. You came down and you bounced off of this 20-day moving average, and you're continuing to push higher. So, is XLI, lagging? Well, it looks like it is because the tech sector itself is so strong. I think the relationship, if you were to take the XLK out of the S&P and look at everything else, I think the general trend would be down. So it's really, the XLK is holding everything up. That was my point. XLK plus these defensive sectors all moving higher are the balance against the other sectors that are declining. So
very good. Appreciate it, sir. Yeah, I was just looking at Boeing making up 7.35% of the XLI. So yeah, it's certainly been on a strong move as of recent.
Let's get that there. There's a chart of Boeing, and you can it's continuing to draw itself down. It's running below the 50 and the 20-day, and it hasn't quite reached the 200-day, but it's approaching it, right? So is this guy going to continue to push lower, or is he going to catch his wind and come back up? Time will tell.
Absolutely.
But right now, this is drawing a lot of the strength out of the XLI, I believe.
So Boeing oh, holy cow, guys. Is this a sign or what? Boeing is 7.37% of the XLI.
Excuse me.
Oh, I love it.
Take that how you will. Union Pacific 5.13, United Tech 5.08, Honeywell, GE, Lockheed behind that. So
yeah. CSX,
that's a
Norfolk
tweet-worthy.
Southern. You got rails up here that are actually doing pretty good. I mean, look here at CSX. That's really nice. It bounced off this 50-day. It recovered from it and is pushing higher. So, cheap energy is going to make the highest expense for these transportation is obviously the energy, the fuel. Mm-hmm. So cheap energy is going to help them, although coronavirus and reduced orders and shipping and stuff may temporarily derail these guys, no pun intended. But I still see these guys, these rail carriers pushing higher here at Norfolk Southern. Yeah, look, I mean, there's, the market's got legs. So,
do you guys think
United Technologies? Didn't I hear something about a merger with United Technologies and someone else? So yeah.
You guys think Tesla's going to be making all the airplanes in the future?
All back over into Alex's court and talk about Bitcoin 10,000.
Yeah, I'd love to have Alex come in and give us some Forex info as well as touch on that move in crypto. So, sir, whenever you're ready, we'll get your screen. Your direction. You muted yourself, sir.
I'm saying I'm ready as hell.
You were born ready.
No, that's classic American Hollywood. I'm not saying that.
He stays ready so he doesn't have to get ready. All right.
Yeah, I'm okay, guys. Let me just share something which I found for our beloved boss. Look this, Todd. This is the I found on the trading view the S&P a larger frame. Do you see it?
All the way back to 1932, yeah?
Wow.
No, this one is back to 1872. Yeah,
wow.
so
Very nice.
I'm gonna send you the ticker. So I mean, even
Very
if you
nice.
do just a basic wave count, we are getting up there to 4,300, and trend line is around 6,000. So just simple. I just did that basically 3 minutes ago. So I surely agree. From this perspective, we still have relatively much more upside to come, you know.
But we can't escape the fact that parentheses wave. Hold on. We can't escape the fact that parentheses wave 4 is gonna suck.
Yeah.
That's gonna be a bad generation.
But I mean, from the management perspective, I think you are right on time, because you're gonna need to do a lot of hedging in a year or two, huh?
Right.
Okay, so let's go on cryptos. Let's look at the Bitcoin, and the Bitcoin is surely working on the upside. So we had the member webinar yesterday, and I'm still, as you know, conservative by the nature. So I'm gonna hold my stance here that this is still the orange wave 1 completed. As we know, usually in the most of the technical analysis using Elliott, previous B waves and the X waves are the point of resistance. So I'm going to count this as a 5 waves up and broke this channel. We are trading 10,384, and I think that is on a smaller time frame, possibly our completed wave 5. And I'm going to look now for a 3-wave pullback. Oops, sorry guys, for a 3-wave pullback from here back to, let's say, 8,200, 8,500, 7,500. So we are still kind of observing this first move upside. I presented one of the more extreme wave counts, which we are in a 1-2-1-2-1-2. I hate to do this type of things, but just in a case with cryptos, we'd get. Yeah, I mean, we know
that's how you get the Bitcoin 50,000.
No, this is like a wave 1 up to 14,000 very soon, and then we're gonna small pullback to this trend line, and then we go up to a 50. But I'm not seeing so much subvert traction in this supposed to be wave 3 of 3. So I'm gonna stay with this conservative 5-wave move here, which I think they're gonna bring us back to 8,000 and give us a proper entry for the longer term strengths. We have also some other cryptos which are kind of beginning their uprise. We see here one which is called Tezos, which is gaining a market cap, and we are seeing a nice price action here above the channel. So this one is definitely moving according to our Elliottwave script. So there is a 5 waves up in one, very nice pullback in wave 2, and we are now doing 1-2. and orange wave 3 take us to a new highs in a green wave 3. So this one is working its own kind of dance. It's not correlated much with this one, but with the rest of the crew. But I think this one is starting to trace out the first 5 waves up to, let's say, 1160 on this logarithmic scale. Also, the other ones, we have seen some of the strong moves in cryptos regarding Ethereum Classic. So we are kind of starting to see potential huge implications in cryptos. So if this is correct, we are 5 waves up in 1, down in 2, and now disregard this low because it's not correct. It's crypto compare or Kraken mistake. We checked it. So this is a wave 1, 2, and now we are seeing a big potential on the upside. We need to cross some levels, and then I think we can maybe pound the stamp that the cryptos are going to go up in the next few years. Also, Stellar and Ripple. Ripple is one of, particularly from the larger time frame wave counts. I think we have been bearish on Stellar. We have some members which are long from 19, 17. We was expecting 15, but few of our members already took longer term positions on that. We have been really nice on top of this wave count analysis, and this one I think it's in a finished 4th wave, and we are working now a green wave 1 up down into up into 5. So still time for a longer term entry on cryptos. So I think crypto markets are kind of performing nicely, and it's according to our beginning wave count. So it's right on time and right on schedule. Okay. So I'm going to show you a little bit of the teams in Forex. I'm still looking for the some of the Forex wave counts to unfold. Let me just take my Forex platform here. Oh, this is cryptos. Oh, why it doesn't give me? Just a second, guys. Okay, so let's look some of the Forex pairs. Euro dollar is definitely on the way to its 108, 107 zone.
Desktop from hell.
You need some folders there.
Yeah.
Folders are free on a Windows PC. You could just create a new one anytime you want. Use as many as you want.
Thank
you,
guys.
Just kidding with you.
We're just giving you a bad time because we love you.
Yeah. Terry is giving me that all the time. Okay. So we have been basically pounding our drums to 108, 107 for the last year and a half, if you remember, guys, and we are coming slowly there. I don't see for now any bounce in euro, so I think we are in the last part of this ongoing move down, and I think we are in the last part of the 5th wave of this long ending diagonal structure, which is very long, goes back a year and a half, and I see expanding diagonal here in A, up in B, and now we are in the last few sequences to this 107, 108, which means that I think very soon we're going to cover this Macron gap, which we have been targeting for, but this was basically untradeable market. Okay, so you can't trade this price action. It is straight from hell trading. But if you look some technicals, we are still trading below this 200 moving average. The lower trend line comes around at 786 at 108.04. At that distance, this gap will be covered, and I think we are going to bounce in a ABC pullback in an X wave in euro against the US dollar. Okay, so I see a little bit more move in euro down, and then a possible 2-year bounce in this X wave technically. Dollar is still holding. I still don't given up on the shorts on this guy. I'm going to show you that we are against a very strong trend line, which goes back to June of 2015. Okay, so if you look this trend line, this one is a rocket. If we start to penetrate above it and do that in a significant manner, I might throw my towel, but not yet. Okay, I'm still looking that we are in some type of a wave 2 here, either here or a little bit more upside, and that we're gonna do some of the at least 107 target. I have a first target in dollar yen, and I'm gonna show you CAD yen, which is going to be, I think, today a short entry for us. I see a very nice 5-way move down, most probably corrective pullback. The risk is very small, so we're gonna wait a little bit more upside and take short position, at least for a measured move, which is slower in this ABC. So we have some trades to put on relatively soon. Gold is in sideways pricing. We are still expecting a little bit more upside here. We are waiting either this to be a longer triangle, or we are going to develop something more directly. So our first targets in gold are around from 1,675, it goes to 1,734. And for a moment, we think that this is a 5-way move down, A, flat in B, and 5 up in C to complete around or a little bit above 786. So we are monitoring this situation very closely on gold as well, with the TLT going higher. So rates are pushing lower, so that's all aligned. So we are going to have to see from the macro stand perspective what is going to happen when the gold hit these targets and the yields probably find some support. Are we going to go a little bit in a more inflationary scenario, or we're gonna stay deflationary? But I'm just going to pay you attention on one more stuff. I think that this Aussie dollar, compared with our chart on copper, is signaling a little bit inflation ahead. Okay, I don't know if that is a very wise thing to say in this all few years deflationary scenario. But I see on copper and I see on this Aussie dollar a little bit more downside, and then a potential at least half or 1 year move on the upside in the probable inflation scenario pickup. So that's from me, guys, this time. Any question, comment, except of my desktop?
That Euro chart was encouraging to start. I think a lot of decisions are made at that 786 retracement, whether it holds and bounce and the dollar sells off as our rates and all rates around the world are low. Who knows? Or if it fails somehow and we do break down in euro, that's pretty. That's promising for the end of this kind of drought and volatility in the foreign exchange market. So
yeah, I'm looking forward to it. Yeah, if we go through this 786, I mean, then the parity is not very far.
Yep.
Very good.
Bennett, you want to wrap us up?
Yeah. Anybody have any closing thoughts? Anything else you want to touch base on? I think we've held them long enough. The markets are opening up here, pushing 33.77, spot 8.3 in the S&P cash session. Yep. So we'll be watching that upside zone and seeing what transpires. Appreciate you guys.
Nice leader. Oh, sorry. I'll just insert nice leaderboard here in the sectors. You've got energy is kind of double percent gain, everything else energy, but then you have discretionary, communications, financials, materials, industrials, technology, all leading the S&P. So that's a strong sector leaderboard here coming out of the gate in the early going. So that's all I wanted to say, Bennett.
Yeah, definitely. Very strong. Good scoreboard to start the session out with. Can't beat it. So, guys, again, our apologies on the YouTube link confusion. We'll get that sorted. We started on time. Next week we're going to start on time and the right link. So we appreciate you guys sticking with us, and see everybody next week. Members, we'll see you in about 15 minutes.
Hey, thumbs
right,
up,
guys.
thumbs down.
Very
See you
good.
guys.
That's right.
And we know where we made mistakes. We're going to try to get it corrected for you.
That's
guys,
right. All right, guys. Thanks
I'm
again. We'll
confident in
catch
the
you all next
team.
week, huh?
See you
ya.
guys.
Take care.
See you. Bye bye.